Hello, traders. Gary Wagner here. It is 11:47 in Honolulu, 5:47 in New York on Friday. Happy Aloha Friday, as we say on the island. It is the 26th day of August, 2022, and this is the Daily Report for Gold and Silver, our weekend review. Federal Reserve Chairman Powell delivered a fire and brimstone speech at Jackson Hole today, shaking the financial markets to their core. Gold sold off sharply, giving up $20.60 or 1.16%, with the most active December contract currently fixed at $1,750.80. Of course, we went long this week at $1,747, but yesterday raised our stop to $1,759, effectively pulling $1,200 profit out of the trade today as Chairman Powell drove gold prices lower. Now, it was a combination of selling pressure and dollar strength. The dollar is currently at 108.77 after gaining about 0.3%. Silver lost 1.8% in trading today, with September silver now at $18.77.5. And in terms of the financial markets, we had a major sell-off with the Dow Jones Industrial Average giving up 3%, the Standard & Poor's giving up 3%, and the NASDAQ Composite losing approximately 4%. It has been a wild week, with Powell's keynote speech capping it off, taking precious metals and the financial markets at large into a tailspin. As we said, gold did decline by about $20. However, we were long on Monday when we entered our trade at this candle here at $1,747. Initially, we had a stop at $1,734, and during the week, we saw some nice gains come into the market. However, yesterday, knowing that we could see some increased volatility, we moved our stop up to $1,759, and when gold fell out of bed, so to speak, this morning, it did stop us out, but it stopped us out with a $12 profit, or $1,200 per COMEX contract. Obviously, we are going to enter the weekend flat with no active trades after pulling a small profit, which could have been a terrible decline had we not moved our stop up. What is important now is, with the hawkish tone that Powell delivered today, where could we see gold prices head? And to that answer, I've put up a Fibonacci retracement of this last rally beginning at 1680 and ending at 1825. The market fell to approximately the 61.8% retracement on Monday before rising back up and actually filling this gap here. However, with this new fundamental event, we could see gold head lower next week. We want to look at a couple of areas. It could fall to 1734. However, with the hawkish tone that Powell conveyed today, I wouldn't be surprised to see a much deeper sell-off, and our target for our first level of support could be $1,731. In other words, we pulled a small profit. What is important is to let the dust settle, to let market participants have the weekend to digest this and see what kind of fallout occurs on Monday morning when the markets reopen. Of course, the financial markets, in terms of equities, all sold off deeply, with the Dow Jones Industrial Average losing over 3%. We have just pulled up a Dow Jones Industrial Average chart, and take a look at this daily candlestick. It is obviously a large red candle, and the fact that it closed at the low to me is also significant. It is above the 50-day moving average, but I expect that that could be short-lived if we see a follow-through of the carnage that we saw today following Powell's keynote speech. The NASDAQ composite also closed lower by over 4%. About the only assets to gain value today were yields on U.S. Treasuries as well as the dollar. We are looking at a daily dollar chart, and you can see the extreme volatility exhibited in a single day. That is this large candle right here with an extremely extended low and recovery that was pretty quick. On a technical basis, we could see some resistance in the dollar at this now double top that occurs just above 109. But traders, we can all acknowledge one simple fact, and that is that the financial markets have been driven by headlines, and the headline of Powell's speech today was certainly showing a strong resolve to continue to raise interest rates and let the U.S. economy fall into hard times if needed. I am pleased that we are going to leave the week flat after pulling a small profit. We'll let the dust settle and talk about our strategy next week. This has been Gary Wagner wishing you, as always, good trading. I'm glad we were able to do that on a volatile week like this week. We'll talk to you on Monday for the next daily update and review. Have a great weekend. Bye-bye.